What if I told you that the most exciting, fastest growing economies in the world can collapse into financial ruin in just 48 hours? Welcome to this crash course. Over the next 3 short sessions, we'll examine some of the most vicious emerging market meltdowns in financial history. And we'll see what individual investors such as yourself can do to avoid similar traps. Financial history doesn't repeat, but it does rhyme. We've curated 3 essential deep dives for you. First, we'll start with London, 1825, the world's first emerging market bubble. Investors chased massive returns into hyped-up South American mining stocks. Promoters faked the data, the bubble popped, and over 100 banks blew up. Second, we'll look into Latin America, 1982. Western banks flooded the region with cheap loans tied to floating interest rate. When the US Fed suddenly spiked rates to crush inflation, debt servicing costs exploded. First to default was Mexico, triggering a regional lost decade that rolled living standards back 20 years. If you believed Walter Wriston of Citicorp, you lost 35% of your money. Finally, we'll examine the 1997 Asian financial crisis. Sound economies with balanced budgets and booming exports collapsed overnight. The moment the Thai currency wobbled, international lenders panicked and yanked their capital indiscriminately. Investors took a brutal double whammy. Stocks crashed, currencies cratered, and investors took a near total 90% wipeout. So who should take this course? If you are an individual investor, this crash course will help you identify the warning signs of risk in emerging markets. And to truly verify your knowledge, we've included a comprehensive quiz at the end of the final video. It's designed to test your ability to understand emerging market meltdowns and hopefully avoid the next one. The path to financial literacy starts with financial history. Let's dive into Britain, 1825. Enjoy your crash course. You will also find the link to the pop quiz in the comments section below.